In 2023, the German DAX40 made plus 11% in profits, the S&P 500 plus 22%, and the NASDAQ 100 a whopping 50%. And I will show you in this video how you can replicate these results. 2023 was a great year for investors, sure, but you can become a successful investor too, no matter if you're a beginner or a professional. There is lots of content out there on social media that is pitching this financial product or that financial product, some random crypto here, another stock there. And of course, everyone should fix and flip real estate. But that's not how it works, guys. Successful investors have a strategy and they understand at least somewhat what they're doing. And to help you to become a successful investor, let's talk about possible asset classes that you can invest in first, and then you get the most important investing tips right after. Ready? Let's go. To find the right investment for you, which isn't necessarily the right investment for me or other people watching, we need to know your personal investment strategy, which you can form pretty easily with these 3 questions. Why do you want to invest in the first place? What's your goal? You want to get a tremendous amount of money and get super rich. I get it. But that would take a tremendous amount of risk as well, which we'll come to in just a moment. Think of more realistic goals. Do you want passive income? Maybe because you want to be financially free at some point. Do you want to save taxes while investing? Because the more tax benefits you get, the more you can reinvest the money that you get from Finanzamt, right? Maybe you are saving for a specific goal that you have in mind. Buying a home, for example. If so, when would you like to buy your home and how much money do you need for that? Which brings us to the next question. How long do you want to invest? If it's for a year or two, the investments you should choose are vastly different than the investments if you want to invest for 10 or 20 years. And if you think of 5 to 10 years, which most of you guys are saying in the meetings, why? What happens afterwards? Do you want to leave Germany again and have a different investment? Or do you want to keep the investment running if everything goes well? These might look like very easy questions, but they're not. So take your time and ask yourself these questions before you start investing in something that is not good for you. And the last question, how much risk are you willing to take? No client ever called me and complained about the profits that we make. Hey Axel, I just wanted to let you know that we're making too much profit. Please stop making so much money. Nobody ever complained about profits. It's only the losses that hurt. So ask yourself if you can sleep well when your investments are down by 10, 20, 30%, or almost 40% that the stock market lost in less than a month during the COVID crash. Can you still sleep well if that happens? Now that we've answered the questions about your personal investment strategy, let's see what we can actually invest in. As we just said, it comes down to your time, your risk tolerance, and the goals you have. High-yield savings accounts are really good for short-term investments, and they are much better than 2-3 years ago because of the increased interest rate. And because some of you guys are asking about bonds every once in a while for short-term investments, according to my personal opinion, high-yield savings accounts are, at least these days, a lot better than bonds. Why? Because they have absolutely 0% risk, except if the bank goes bankrupt, of course. That's why our calculators for the flexible and the fixed-term savings account show banks in the European Union only, because they are insured up to 100,000 by the local government. That is much better than bonds with the inverse relation of interest rate and bond prices. Here you can see that bond prices generally fall when interest rates increase. So you better open one of these savings accounts than invest in bonds. Next investment, real estate if you have at least 10 years of investing horizon. Why so long? Because you can sell investment properties completely tax-free after holding them for 10 years. Pretty nice if you ask me. Buying a rental property yourself can be a really good investment for everyone making more than 60K a year and with at least 10K in savings. Real estate is not cheap, guys. And that's why we created our real estate security tokens to give people with less capital the opportunity to invest in real estate as well. You can learn more about our newest project, near Munich, with 50% profit share in this video. From the investments with the lowest risk, we come to the investment with the highest risk. Crypto. Nowhere else than with this asset class. The sentence, only invest what you can afford to lose, is true. And oh boy, is that true. If you remember Luna, for example. What has been the hype over the last weeks was the Bitcoin ETF. That's one of the ways to invest in crypto now, aside from direct investments. If you want to learn more about the Bitcoin ETF, then tune in next week to watch our video about that. Crypto is very similar to investments in precious metals like gold or silver. Ask yourself if you want to invest for the short term, trading any price fluctuations, for example. In that case, an ETF or an ETC, exchange traded commodity, is probably the best. If you want to invest or hodl for the long term, buying physical gold is much better in my opinion because you can sell it tax-free after 1 year, just like Bitcoins. And no, you don't need to store the gold at home. With the right providers, you can store it super cheap in a vault and get it delivered to you at any time. And last but certainly not least, all kinds of investments in the stock market. Telling you to invest in the stock market here, publicly on YouTube. I'd say this can be a good investment option if you have an investment horizon of at least 5 years, better 10 years. Of course, you can invest with a shorter time horizon as well, but as you can see in the table right here, it can take quite some time until the stock market recovers, up to 630 days. So give yourself the necessary time and stop this day trading or single stock that you see on social media. For the vast majority of us, this is not gonna work unless you devote a significant amount of your time so that day trading almost becomes your full-time job. And for everyone that doesn't believe me, here's an interesting statistic from the University of Arizona. Over the last 90 years, half of the total return of the stock market comes just from 86 stocks. And only 4% of all stocks out there perform better than treasury bills with super low return. And now you tell me what the chances are that any of us finds these stocks. The odds are stacked massively against you. And that's why most of us are better off by investing in the global stock market than trying to find the very few winners. And that's where ETFs or index funds come into the picture. Now the question is, do you put your ETFs in one of these brokerage apps like Scalable Capital or Trade Republic? Or do you secure additional tax benefits with pensions if you invest for the long term anyway? You can learn more about the tax benefits of investing in ETFs inside pension schemes in our pension playlist. And if you wonder which of all these investments is the best one for you, then you can book a free meeting with us right here and we can help you out. Now that we know what we can invest in, let me give you 3 investment tips as well that will decide if you're a successful investor or not, no matter which of these asset classes you choose to invest in. The first tip is a great German wisdom, so we just leave it as it is. Hin und her macht Tasche leer. What does that mean? The more you shift from one investment to another, the more you will lose. I just invest in this because someone on TikTok said it. This week I invest in something else because the newspaper said so.
Stop it.
First it was the FANG stocks that were big in the media in 2013. Facebook, Amazon, Netflix and Google. Then it was FAANG because Apple was included in 2018. And since last year it's the Magnificent 7 with the fall of Netflix and the rise of Tesla, Microsoft and Nvidia. You see where this is going, do you? Every couple of years the media looks backwards, checks which stocks were the best and then tells you to invest in that. But that doesn't mean those stocks will be the best right now going forward. It's so incredibly dumb once you understand the game that they're trying to play with you. So please, don't let them do this to you, because hin und her macht Tasche leer. Second tip, and I understand you want the highest return that you can get, I want that too, but we have to understand that there are different stages in life. First, you should focus on saving and investing as much as you can. And later on, you can take care of optimizing your return or your taxes. Think about an investor with 100 euro invested making 100% return. Congrats on 100%, but he just made 100 euro with investments. And making 100% return per year is insanely tough to do. No one in human history did this consistently over the years. But saving 100 euro a year by canceling some unnecessary subscription you don't need or changing your mobile phone provider is much easier to do. I just changed my mobile phone provider earlier this year, and this saves me 360 euro a year going forward. We talked about this overthinking of improvements in the real estate company video already. Of course you will save taxes with your own real estate GmbH, but you need around 10,000 euro rental income per year to pay for all the structural costs of the GmbH. Otherwise, it will cost you more than the tax benefit. And the last tip for successful investing in 2024, diversify your investments with lots of different asset classes we talked about earlier in this video. Just because one thing is a great ingredient to a meal, it doesn't mean it should be the only thing on the dinner table. Create a nice diversified portfolio for yourself by investing in many different asset classes. That's what I would do if I wanted to invest successfully in 2024.